stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs this week by Kevin Cook. And we have a large oil company, an oil company, and we have a Chinese internet giant. So Kevin, let's start with you because you brought the Chinese internet giant. Baidu is the ticker. Now they've been a little bit out of favor amongst investors over the last couple of years. I know out of all the Chinese internet names, they're kind of the one that no one liked. Why?
Yeah, right.
Why is that?
Well, as you and I discovered, Tencent was really sort of the sleeper Chinese internet that nobody knew about it, and I think most U.S. investors would stay away from any stocks that had 5-letter symbols.
That's right.
Which is the case with Tencent.
Yes.
And so Baidu has been known as the Google of China, and it still is. It still has 80% search. They just reported a couple weeks ago. They were a Zacks #1 going into the report because, as you know, analysts had just raised estimates before the report. But even though they reported record numbers, top and bottom line, the guidance for Q4 was lower.
Okay.
And so the stock was trading 260, and they slammed it down to 235. But then we're sort of looking at the dust settling here, and I read the analyst reports, and I looked at it as a chance to get in near 240 because the reason that the Q4 guide was lower was a couple of divestitures. They got rid of a food delivery business, which that business must be tough because I know Amazon just closed like 12 operations or like operations in 12 states for food delivery. So that must be a tough business.
Yeah.
And then something with gaming. But I like where Baidu is going. Let's just take a look at where they've come from, though, and why it's been tough to be a Baidu investor. So this chart goes back to 2013, but you can see that the stock peaked in 2014 above 260 or close to 260, and then it's just fallen with estimates, right? Just following the Zacks rank, estimates coming down. Zacks rank is in the cellar, probably lots of 4 and 5s here for the rank, and the stock, just consolidated below 200. Finally took off this year, got a better Zacks rank, and so I just looked at it as an opportunity to get in. Now you wonder why, and I'll tell you, revenues were always going up. From 2015 to 2016, revenues went from $8 billion to $10 billion. But obviously EPS was coming down, and this next graph sort of explains that. They were losing ad revenue. So whereas Google and Facebook dominate digital ad revenues, Baidu was losing in the game. Who were they losing to? Tencent and Alibaba. So you can see from 2015 to projected to 2018, Tencent and Alibaba grow their ad revenues. Baidu's keeps shrinking. So you would think, oh, is this a reason to?
That's a bad sign.
Should we sell the stock, right? I just think there's a lot of other things, good things going on here. So they, one of their businesses that also created a weak Q3, Q4 is they have the Netflix of China, which is called.
You're going to pronounce it?
I was going to. I had it memorized, and now I can't.
We'll believe you. The Netflix of China.
It's spelled capital Q-I-Y-I.
Okay.
I forgot how to pronounce it. But
I'm
anyway,
not going to go there.
Yeah, and so there was a big Chinese communist conference that happens, annual summit once a year, and they had to sort of tone down advertising and sort of self-restrict on that. But this video platform, they're #2 behind, I believe, Tencent, and they're monetizing subscribers. So they might have 400 million viewers, but they're starting to get more paying subscribers. And so that's going to be a big area for them. The other big area that I like is artificial intelligence.
Oh, everybody loves that.
This is another way they're like Google. So not only will they still dominate search and be 80% of the search market, they're going into advanced technologies. And so you may not know about all these different labs that Baidu has going on. Silicon Valley, they've had a lab there since 2014. And focused on their search business, they're doing a lot with speech recognition and language translation, end-to-end, and really trying to dominate there in all languages. So, but then they just inked a deal 2 weeks ago for driverless cars. So that just like Google, they're going they're going to have autonomous cars. They're going to help build them, hardware, software, you name it. And so this is where I'm excited about the future of Baidu. They actually lost 2 of their best people. Andrew Ng, His last name is spelled NG. He runs Coursera and a lot of AI initiatives. He left in March, and the stock has done nothing but go up. And they lost another guy from Silicon Valley, Adam Coates, I believe. But people still believe in the AI franchise at Baidu, and they're going to do a lot of cool things with it. So I think this is where the potential revenue growth is as they, monetize what they do in video and search.
Now, is this pretty much restricted just to China then?
Yes.
Okay.
Yeah.
So this is a pure China play.
Exactly. Okay. Exactly. And nobody's going to come in. Google left
There's
China,
no
right?
Yeah, right. They're not there.
They own it.
Right. Right.
And Baidu is Netflix's gateway to China. They already have a licensing deal where Netflix can bring in some content.
Wow.
So,
interesting.
yeah.
Yeah. There's a lot going on here.
I mean, the stock is a little expensive if you're worried about the pace of earnings growth here. I mean, I'm a buyer at 240. I'd definitely be a buyer at 220, and I don't think it goes below there. JP Morgan lowered the price target to 225 on the weaker guidance for Q4, but I think the stock holds above there.
Okay. Okay. This is one to watch.
Yeah.
This is the best presentation I've heard on Baidu ever, I think. My stock is one of the big oil companies, ExxonMobil. Exxon has not been a #1 since 2008, and so when I saw that I was like, what? Something is going up here. I had to take a look at the estimates. You can see for this year and next year, they all got a boost, and all of the analysts across the board have boosted. That hasn't happened in forever with any of these big oils because, as we know, everything that's been going on with the price of crude down, estimates have come way down. I mean, they made something like $237 a year ago.
Wow.
So to be at $362, that's a nice recovery there. Exxon's got the big franchise. It has both the drilling side, it's got the refining, and it has the #1 chemical business in the United States. There's no doubt. And they've been growing that. Those areas, the refining and chemicals, real conservative, kind of their backstop to the price decline in oil.
Right.
So if you really want like a go-getter E&P type of stock and company where if oil surges back up to $70 or something, the earnings will really see big gains, then Exxon is not the one for you.
Okay.
Because it is much more conservative. That's how they've been able to keep the dividend during this downturn. They've always been conservative in like where they're drilling. They do have global, worldwide operations. They're kind of starting to take down looking at Brazil area. They've been real slow to go in down there. I'm not sure totally what they're doing in Mexico, but that might be another opportunity for them.
Are these estimates going up because analysts are looking at inflation or commodities or the chemical business?
It's kind of a combination of all, and that they do expect oil to maintain between 40 and 80, and Exxon is able to drill it out, especially in the Permian.
Right.
They have added in the Permian, which is the big area for all the E&Ps right now. So they have 20 active rigs there right now, up from 16 a couple months ago, and they expect to have 30 in the Permian by the end of next year. So that's going to help with production a bit.
And that's the cheapest cost of production down there, right?
Yeah. And they're extending the midstream there. They just bought a terminal, and they're going to tie it in with their Gulf Coast with the refining and the petrochemical huge business that they have there.
So this is probably good for the rest of the oil patch too, right? If Exxon is seeing tailwinds?
Yes, they're kind of the bellwether, all the big oil guys. But as I said, if you're on the E&P side and that price of oil goes up, that's where you'll
which
really
we're starting to see. I saw 57 this morning.
Yes.
So we should see more of the smaller pure plays, E&Ps, getting #2 and #1 ranks.
Yes, those will slowly start to move up too, but I was surprised to see some of these big guys. Now you can kind of see, I brought the overall chart, you can see the decline in the earnings over the last couple of years. It started to get better even last year, and then you can't totally tell on this chart, but right at the very end of this year and for next year, it starts to like kind of start going up there. That's where you're getting the 1 rank from, because the analysts are starting to get more bullish here, but we're nowhere near the 2014, as you can see that big red line up there for where earnings were there. And the stock, as I mentioned, it is off the lows. It never suffered as big of a sell-off as a lot of the others. So it's slowly gaining, but we're not even quite at the year breakout yet. But, with everything starting to turn around here, it's time, I feel, for investors to start looking at oil, and especially the big guys. They have the dividend. This is the more safe play, so you're not going to suddenly see a doubling of Exxon's stock like you would with a small little E&P.
But even this summer, you could have bought it, in the high 70s.
Yeah, plus with the dividend there. So Gotta kind of like these big oil plays. I'm going to be keeping an eye on those. A lot of these big cap companies, do you think the story's over with the big caps?
Not at all. I mean, these are the ones who are going to leverage it. So I focus on tech, Amazon, Google, Facebook, Baidu, Baba. This one thing that I keep citing is Bank of America did a study on augmented reality and virtual reality. They said that market is going to grow 3,200% in the next 4 years, from $5 billion in revenues in 2016 to $160 billion in revenues in 2020.
Wow.
And Apple's going to dominate there, but so are these other players, and Baidu too.
Yeah. Okay.
So big caps, you still got it. Yeah, you stay with them.
Okay. Yeah, I'm with you. For more stock picks, be sure to tune in on Zacks.com. We have stock picks of the week every week, plus all of our bull and bear of the day videos and write-ups over there with a lot more number one stocks in that bull of the day. So if you're interested in number ones and checking out all of the stock picks that we have, be sure to tune in on Zacks.com.